welcome back to my channel. Today we're going to cover USDA loans. We're going to go over the property requirements, what the appraiser looks for, and some of the loan requirements. These are basic requirements that USDA sets as their guideline. Before we get into it, please like, subscribe, all of the things, so that people just like you, home buyers, home sellers, can come across my content and hopefully help them in their journey of buying or selling a home. Hey there, I am Christina Sparks, realtor with Real Broker, owner, House of Sparks. All right, today we're talking everything USDA loans. First, I'm going to go over some of the house requirements. When you're looking at a property, you can kind of gauge whether or not the house will pass for a USDA loan. And then I will kind of go over the general guidelines for the loan itself. Let's get started. All right, first things first, a USDA loan is a government-backed loan. And for that reason, the government has set guidelines that a property must follow in order to qualify for the program. A USDA eligible property has to be within a certain area. It's not like conventional or FHA or VA where you can buy literally anywhere. USDA focuses on rural properties. Down below in the description box, the very first thing is going to be a link to the USDA's website map. Now, if you look at this map in your specific area, you can see the boundary lines for where properties will qualify for a USDA loan. Now, when it comes to the house itself, USDA focuses on safety and soundness. The house has to obviously be livable and not need some immediate safety type repairs. A few of the general things that USDA is going to be looking for: the house needs to be structurally safe and sound with no major defects or hazards. Some other things USDA will be looking for will be functioning plumbing, electric, heating, cooling, those basic things when it comes to a functional house. Now, some other things USDA will be looking for are things like extreme issues. So you're looking at the roof, on the inside, if there is extreme sagging in the ceiling, noticeable water damage, fungal growth, those kind of things USDA will not allow. They will flag for either repair or they will disqualify the property altogether. Now, here's an interesting fact that I just found out today. I did not know this. So with USDA, if you're looking at a brand new home, you are not allowed to have an in-ground pool. Now, they do make exceptions for previously built homes with an in-ground pool, as long as the pool is inspected by a licensed home inspector. All right, so when you're looking at properties online, on Zillow, on Realtor, on any of the websites where you can look at homes, hopefully you're working with an agent that can send you the information for each property that you're interested in. Generally speaking, on the listing, it should state whether or not the seller will accept a USDA loan. If the seller doesn't want to accept a USDA loan, it is most likely because the seller does not want to deal with a government loan. They can be a hassle, and the seller probably doesn't want to run into any repairs that the USDA might require, whether that's because they don't want to or because they just don't have the financial means to do so. Let's talk loans, okay? Now, USDA has a set of guidelines for the person who can qualify for that type of loan. Not just the house, the person also has to qualify. Please keep in mind that your individual credit profile will determine if you are eligible for this loan. So these are general guidelines. Just because you meet some or all of them does not mean you will qualify. So keep that in mind. Talk to your lender and see if this program is going to be right for you. So first and foremost, the best thing about the USDA loan is it is 0% down. That means you have no down payment, but that does not mean that you don't have closing costs. So understand the difference between closing costs and a down payment. You can also watch this video and learn a little bit more about the difference between those two. So while this loan is a 0% down, you will still have closing costs, which you can always ask for from the seller when you make an offer. If you want to know more about that piece of it, here's another video. It talks about seller concessions and how you can get basically to the closing table without any money down. With USDA loans, gifts are allowed. So let's say that you do have some closing costs or you do have to come up with a down payment of some sort. Gifts are allowed, meaning your mom, your dad, your cousin, your brother, if they want to gift you that money that you need for the closing table, they can do that. Now, this will subject the gift giver to a review. The lender will want to see where those funds are coming from and if it hinders the gift giver in any way financially. With USDA, there is no max loan limit. You can buy to the moon if you can't afford it. Typically, USDA requires a 640 credit score. It's not always the case. Some direct loans can be processed with under a 640 credit score. So again, talk to your lender and see what kind of credit score that they are going to require. And feel free to shop lenders because you could get a better rate, a cheaper amount on your closing costs and loan fees. Shop lenders, I strongly encourage that. USDA allows a max of 6% in seller credits. Seller credits are seller concessions. So if you're buying a $300,000 home, the max amount you are allowed to ask the seller for is 6% of that $300,000. You can't go any more. The loan won't allow it. So USDA does have income limits. There's a certain amount of money that you're going to be capped out that you're allowed to make in a year. For a household of 1 to 4 people, the max amount for that household is going to be around $119,000 a year. Now, if you're a bigger family with 5 to 8 people in that household, your max income is going to be set around $158,000. And that's going to be your gross monthly income before taxes. This loan does also have DTI requirements, which is debt to income. You can watch this video and learn a little bit more about what DTI is and how you can calculate it for yourself. The average DTI is about 41%, with the low end being 32 and the high end being about 44%. Again, it's going to depend on your individual credit profile, what this part looks like for you. Whew. That was a lot of information. I hope this gave you a little bit of a head start on if USDA is even right for you. Now, remember in the description box below, the very first thing is going to be the USDA eligibility map. This will give you the areas where you can buy a home with this loan. It is area restrictive, so make sure you understand that before you start falling in love with houses. I hope you learned something today. I hope it was helpful, and of course, feel free to reach out if you have any questions. Get in touch with a lender if you haven't already, and really make sure that you understand what type of loan you're getting into before you start signing papers. Have a great day.